In 2025, the Los Angeles real estate market's shifting again, but in new ways, at new price points, and with new strategies required. The market didn't cave in like other areas in California during the pandemic, but it sure shifted. Prices in LA County went up and inventory went down. 2021 was a frenzy, 2022 was friction. 2023 was a standstill when climbing interest rates and inflation redefined what affordable means in this town. In this video, we're going to look under the hood to see where the market stands today and what it means for you. You'll also see which neighborhoods are the most competitive right now. One of them was really unexpected. You'll also see which neighborhoods are struggling. If you're new here, I'm Tony. I'm a local realtor who helps people make smart moves in Los Angeles, whether you're relocating, upgrading, or investing. With that, let's go. We start with mortgage interest rates because they're the foundation of what's happening in real estate. This is the backdrop to everything. When borrowing gets more expensive, it ripples through the entire market, affecting affordability, competition, and even seller motivation. So in slide 1, we have interest rates, a historic chart for a 30-year mortgage going all the way back to 1971. And it really puts today's rates in perspective. In the late 1970s and early 80s, rates skyrocketed above 18%. From there, we saw a steady decline for 4 decades, hitting historic lows in 2021, roughly 3%. So while today's rates feel high compared to just a couple years ago, they're still far below the double-digit rates of the past. But for buyers and sellers who got used to 3% mortgage rates, the shift has definitely created some sticker shock. Now here's a chart of interest rates for the last 5 years, showing the 30-year fixed mortgage. As you can see, rates were at their lows in 2020, dipping below 3%, as the Federal Reserve responded to the pandemic. But starting in 2022, rates shot up dramatically, peaking out about 7.8% in 2023. And then since then, they've pulled back a little bit, hovering around the 7% range. Today's mortgage rates are right about 6.8%. So the surge of the past few years put a major impact on monthly mortgage payments, and it's been a key factor in slowing down buyer demand nationally, but not necessarily in LA. There are a lot of moving pieces to the LA County real estate puzzle, so let's dive into more key data that reveals how things are looking. First, let's dive into the supply and demand characteristics of the LA market. We'll begin with inventory, or the supply side. In May 2025, there were 14,461 active listings. That includes single-family homes, condos, and townhomes. It's a 2.4% increase from the previous month, continuing an upward trend we've seen over the past couple years. Now, real estate is seasonal, and May is typically when more homes come on the market, so I've added blue circles to show active listings in May of each year. You can follow the trend line right here. Take a look at where we were back in May of 2020. We had 16,550 active listings. Since then, inventory dropped sharply in late 2020 during the pandemic buying frenzy. Then it hovered near decade lows much of 2021 and 2022, as a lot of baby boomers decided to stay put rather than move during the pandemic. Simply put, fewer homes were coming into the market, but we're still not back at pre-pandemic levels. That drop in available homes coming out of 2020 was one of the most dramatic shifts in recent memory, and it helped drive competition and prices higher in the years that followed. So what does this mean for buyers and sellers today? Well, rising inventory means more choice for buyers and often more competition for sellers. But context matters. Compared to the tightest points in 2021 and 2022, today's market feels looser. Compared to pre-COVID norms, though, we're still in a relatively constrained market. Now let's talk about how much inventory is on the market, the supply side. We measure this in months, meaning how long would it take to sell all the current listings if no new homes came on the market? This tells us how fast homes are selling relative to what's available. Think of it like shelf life at a grocery store. If everything's selling fast, the market is tight. If things are just sitting there, it's a sign that things are slowing down. Each orange circle on this chart shows where we were every May going back to 2020. And as you can see, inventory was highest in May of 2020. That was right at the beginning of the pandemic, with just over 3.9 months of inventory on the market. After that, inventory tightened dramatically, bottoming out around 1.1 months in early 2022. Since then, we've been slowly climbing back, and a year ago, in May 2024, we were at nearly 3 months of inventory. In May 2025, Los Angeles County had 3.46 months of inventory across single-family homes, condos, and townhomes. That's up 2.4% from April and nearly 20% up from a year ago. In addition to months of inventory, we can also ask whether buyers or sellers have an advantage in today's market. Here's how months of inventory figures are typically interpreted. 0 to 4 months is a seller's market, sellers having an advantage in the transaction. 4 to 6 months of inventory is a neutral market, neither party really has an advantage. Over 6 months, it's a buyer's market, meaning buyers have an advantage. So right now, with 3.46 months of inventory, we're still technically in a seller's market, but it's becoming less competitive for buyers than it was even a year ago. For buyers, this means there's a little bit more breathing room, there are more listings to choose from, and slightly less urgency to act immediately. You might start to see some price reductions or room to negotiate, especially if homes sit for more than a couple of weeks. For sellers, it's still a favorable market, but it's no longer automatic. Pricing correctly and presenting your home well matters more now than it did in the peak of the frenzy in 2021 and 2022. Homes that come out too aggressive on their price are more likely to linger and get passed over. Now let's talk about demand. Are buyers showing up? Well, we can get a sense of that by looking at days on market, which measures how long a home is actively listed before it reaches a sold status. This one's simple. The longer it takes for a home to sell, the cooler the demand. A fast-moving market often means multiple offers. Slower markets, more room for negotiation. In May 2025, the median days on market in LA County was 18 days. That means half of the homes that sold last month had been on the market for 18 days or less before closing. And you can see the blue circles on this chart, and they represent the month of May going back to 2020. What stands out is that we're back to the same median days on market, 18, as we saw in May of 2020, even though the market has gone through dramatic changes in that time. So during the peak buying frenzy of 2021 and 22, properties were selling faster than ever, some closing in 10 days. Then as the market cooled in late 2022 and into 2023, that number climbed. Days on market peaked seasonally a few times, but overall, it's been relatively stable over the past year. So here's what that means. The takeaway here is, even though inventory has risen and prices have softened a little bit, and we're going to dive into prices next, the homes that do sell are still moving relatively quickly, suggesting there's a core group of motivated buyers who are active and decisive, especially when a property is priced well. With supply and demand established, now let's talk about how the market is responding. What homes are actually selling for? In May 2025, the median sold price across single-family homes, condos, and townhomes in LA County was $925,000. That's up 2.8% from the previous month, and it marks one of the highest points we've seen in the past 5 years. Now, what stands out on this chart in the longer-term trajectory, if you go back to May of 2020, the median price was $625,000. So over the course of 5 years, that's a $300,000 increase, roughly 48% gain in median price. That's a big move, even by LA standards. Another key moment was January 2022, shown in red, when the median price hit $812,000, just before mortgage rates began their steep climb. That marked the end of the ultra-low rate era and the beginning of a market adjustment that played out over the following year. You can also see a few price dips along the way, particularly in the second half of 2022 and 2023, as higher interest rates began to bite. But the really wild thing in the face of much higher interest rates is that prices have been resilient and the long-term trend has remained upward throughout. So here's a key takeaway. Despite higher borrowing costs and more homes on the market, prices haven't collapsed. Instead, they've held steady or even inched higher in recent months. That suggests underlying demand is still strong and that sellers who price right are still commanding solid values, especially in desirable neighborhoods or well-maintained homes. Now, just because prices are up doesn't mean buying power is. With mortgage rates still elevated, today's buyers are often paying more per month for less house, even if prices haven't surged dramatically. That's where affordability becomes a real hurdle. But this price trend alone doesn't tell the full story of what it's actually like to be a buyer in today's market. And here's the interesting part. Despite prices holding strong, homes are still selling relatively quickly. Remember, median days on market in May was just 18 days, which tells us that demand is still there. Buyers may be pickier and they're definitely more rate sensitive, but when a home is priced right and shows well, it's still moving fast. That's a strong signal that the market's not stalled, it's just more selective. Next up is sold to list price ratio. This tells us how close homes are selling to their asking price. In May 2025, homes in Los Angeles County sold just over 100% of their list price, which means that on average, properties sold slightly above asking. What stands out is how sharply this metric moved over the past few years. In 2020, the ratio was just below 100%, pretty typical. In May 2022, it had jumped to 105.5% during the peak of the seller's market, driven by fierce competition and bidding wars. But the dynamic shifted quickly. As mortgage rates climbed, buyer behavior changed. In January 2023, Homes are selling for 98% or 98.6% of their list price, the lowest point on this chart. Sellers were forced to negotiate and list prices were missing the mark more often. Today, we've rebounded just above 100%, but it's a more measured environment now, and some listings still get multiple offers, but many buyers are careful, and if a home is priced too high, they'll walk. The current ratio tells us that the market is no longer overheated, but still healthy. Sellers can expect strong offers when their home is priced right. For buyers, it means less of a frenzy, but not exactly a deep discount environment either. Now let's dig into the market action in some neighborhoods where the data really stood out to me, the places that are hot and cold. We'll start with the cold neighborhoods, sorted by the sold rate from low to high. Only about a quarter of the listings in Hollywood sold. Homes sat for over 10 weeks and ultimately sold at nearly 20% below list price. Here's the list to sale metric. This is one of the clearest signals of buyer hesitation or overpricing in the market. In the next row down, we've got Sunset Strip or Hollywood Hills West. And despite being one of LA's priciest zones, only 3 in 10 homes sold. Listing closed 20% below ask on average. This suggests luxury buyers are either pushing back or sitting on the sidelines right now. And then we go to downtown LA. It remains a challenging market. Nearly 2/3 of listings didn't sell, and homes took almost 4 months to close. Still, pricing was relatively accurate. Most sold very close to asking price, 99%. Then Hancock Park, Wilshire. This was one of the strongest markets among the weak performers. 37% sold, and interestingly, homes closed above asking. So while days on market were elevated, it seems the right homes were getting the right traction. Now we'll look at hot neighborhoods sorted by list to sale from high to low. There are 2 main areas in LA that are hot right now with high sell-through. The first area is Northeast Los Angeles, or NELA, and there are 3 NELA areas popping up right now: Eagle Rock, Glassell Park, and Highland Park. Eagle Rock homes are selling fast, 35 days, and for 9% above list price. That's not a fluke. That's a demand spike or intentional underpricing to drive bidding. Despite similar pricing to Eagle Rock, homes in Glassell Park are taking nearly twice as long to sell. Still, sellers are getting 4% above ask on average. Buyers may be more cautious, but still closing strong. And then the third NELA neighborhood we're talking about today, Highland Park. It had the most listings, 44, and a high close rate. This is a liquid market. Homes are selling in about 7.5 weeks, typically 7% over list, suggesting persistent demand. The other hot spot in town is part of the west side. There are 2 neighborhoods, Westchester and Palms Mar Vista. In Palms Mar Vista, the median price is above $2 million, and this area is still holding strong. Nearly 3 in 4 homes sold in May, with minimal discounting and a respectable days on market around 6 weeks. What's more, Palms Mar Vista has a price point similar to both Sunset Strip Hollywood Hills West and Hancock Park. Those 2 are on the cold list. So there's a bit of divergence in the $2 million price range between Palms Mar Vista and neighborhoods in the interior. Westchester has a solid sales rate and homes are taking just under 2 months to move, about average for LA. The close to list ratio suggests well-calibrated pricing. So there you have it. Inventory is climbing, but still low by historical standards. Prices holding steady, even rising in some pockets. Demand selective but strong when a home is priced right. And the real action, it's playing out at the neighborhood level, not just market-wide averages. If you're planning to buy or sell in Los Angeles, this isn't a market you can generalize. It's nuanced, it's localized, it's competitive in the right places and at the right prices. If you want help making sense of it all, be sure to reach out. You can call, email, or text anytime. If you're thinking about selling, I'm happy to help you run the numbers, talk about some strategies for the sale of your home in today's market. If you're looking to buy a home, let me help you find the neighborhood that fits your lifestyle at a price point that makes sense. I'm Tony Mariotti. Thanks for watching, and I'll see you in the next video.